Welcome back. You're still tuned into Midcap Radar, and as promised, let's talk about Sharda Cropchem. The stock has been underperforming, and that is something that we've seen across the agrochemical space. In Q3, the company reported weak set of numbers, and they had indicated that they expect improvement in the second half of the year, but this now has been pushed a little further. To discuss the pricing and demand trends, we now have RV Bubna, the Chairman and Managing Director at the company, joining us now. Good afternoon, sir. Thank you so much for joining us. We have been speaking about demand and pricing for a while. What is your indication now? Do you think recovery will take longer? And where do we stand when it comes to demand and pricing or realizations in generally for your products?
Madam, the prices are still going down. Remaining down. They are not going down. And I think now there is a time for it to start improving. I was there in China last week, and there was an exhibition for agrochemical products. And I found a little bit of enthusiasm on all the people who are attending and also the Chinese manufacturers. But it will not be so quick. I think it will take some time. I would say around 6 to 8 months.
Okay, sir. So in the next 6 to 8 months, you expect some amount of semblance of demand returning. Could you give us a sense of what is the kind of inventory that your customers are carrying currently? And do you feel that within the next 6 to 8 months, there can be increased demand coming in there? Also a sense of prices that you expect.
Sir, I would correct myself. When I said 6 to 8 months, that does not mean that the demand will start picking up in 6 to 8 months. I feel the demand is already started picking up. The pace of picking up is a little slow, but and as far as the stock of the customers are concerned, they are also have gone down considerably, and we are getting inquiries from the customers. We are also supplying them. But the only issue is the prices. The prices of many products have gone down to almost 20% of what was prevailing about 18 months back, and them to go up to the level of 18 months is going to take a lot of time, and this price rise is going to be a very slow phenomenon.
It is going to be a slow phenomenon, but you expect it to start in next 6 to 8 months. That's what you meant the first time, right?
Madam, the starting has already taken place.
Okay, all right. Okay,
Yes.
The start has taken place, but it will be longer than usual for it to recover to original levels.
Exactly.
Okay, we get that. So you also spoke about going to China. Now, we've been talking about China has been the center of whatever action is happening in the chemicals or the agrochemical space. First, I wanted to understand, is the internal demand in China increasing? Because if that happens, that would mean dumping would reduce to other nations. Second, you also source a lot of raw material from China. How is the trend there with respect to pricing and also in terms of supply? Is it easier?
Madam, supply has been easier all this time because of excess stock in China. And I think this global problem was triggered and started only from China, because they produced huge quantity of products. After COVID, they thought there's going to be demand, and the demand couldn't catch up with their production. I was there in October last year when everybody was with a gloomy face, and everybody was carrying a very huge stock of unsold production. Now I found that the demand has started picking up, but they have still not exhausted their stocks, and they're still carrying a sizable amount of stocks, which will take some time to get sold in.
So you're expecting some amount of liquidation of the inventory. You said a couple of very interesting and positive points. First up, you said that demand is now back while pricing is still not there yet. Now let us talk a little bit about numbers. Earlier you had mentioned that H2 we would see a recovery in terms of both revenues as well as the bottom line, but that got pushed out. Could you give us a sense of where you would end FY24 at in terms of the top line, the margins and the bottom line? And what is the guidance that you're working with for FY25?
See, it is too fast to give an idea of what is going to be the year ending, because we are only about 10 days for the year to end. All I can tell you, the signals are good, and our Q4 is doing fairly well, but not in terms of quantities, but in terms of prices and the revenue, we are still at a very low level. And those revenue and prices will start picking up only after the Chinese manufacturers are able to get down to their very reasonable level of stocks and the demand starts matching up with their production.
That's something that we've been hearing from other chemical and agrochemical players as well, Mr. Bubna, that once China sees that production matching the demand, prices would see some stabilization. If you cannot give us an outlook, because you had guided for 15% growth, 9 months already you're down 28%, margins are lower, so that means you might not be able to meet that guidance as well this year. But give us a sense of the export demand, because there have been Red Sea crises. Have freight rates gone up, and is that something which is impacting or will impact margins going forward as well?
Madam, the demand is picking up, and the customers do not have very heavy value of stocks. The customers are very comfortable, but customers also are keeping track of what are the prices in China, and they demand a very low price because they are also finding difficult to get better margins from their customers. So to give you an idea, I think in terms of quantities, we may not be very much behind the previous year ending March 23, but in terms of revenues, we are considerably behind.
Understood that, sir. So could you break this up for us geographically in terms of, how exactly is the situation at the NAFTA region that you're present in, and how is Europe panning out for you? FY25, any outlook you'd like to give us in terms of what's been the discussions with your customers?
See, the situation is so fluid. It's very difficult to give you an outlook of FY25, but I can tell you FY25 is going to be much better than FY24. May not be as good as FY23, but it will be somewhere better than FY24.
Okay, all right. Mr. Bubna, thank you so much for joining us today and giving us all those details. It was a pleasure speaking with you, and also get a sense of what's happening in China, because that's where everything starts when it comes to chemicals as well, right? So thank you so much for joining us today. Well, that's the word from Sharda Cropchem. The stock, as we said, is down 24% in last 12 months itself. For the markets, however, continues to do well. The Nifty is very close to that 22,000 mark, as we have been highlighting. It has come off from those levels and steady around those levels. Mid-cap index is an outperformer as well. But for now, we'll do one thing. We'll slip into a short break. Stay tuned. When we come back, Mutual Fund Corner will be here.